Singapore's factory activity barely moved in September. Exports and industrial output numbers also missed expectations. The economic picture isn't bright, and the manufacturing sector appears to be stuttering along. But some market watchers believe there is still value to be found in this sector.
Most companies in the manufacturing sector are actually global. Okay, they don't just serve the Singapore economy. So I think you have to choose stocks that are in sectors which are in a global recovery. The hard disk drive is still in another downturn for another 1.5 years, but the semicon equipment side is actually improving. And we are seeing an improvement in the second half of 2013 into 2014. There are new products that are coming out in the smartphone and in the tablet market, and that actually requires new foundries. And that's why that side of the market is picking up. So basically it is the replacement cycle, so you have to catch the cycle correctly.
There are nearly 300 manufacturing stocks listed in Singapore, so you need to do careful research to pick the gems among them.
You have to start from a macro picture. You have to look at, is the product relevant and has the company the ability to evolve? So if you look at the hard disk companies, the hard disk companies are now in a significant downtrend because people are moving away from hard disk into solid state. So is the company able to evolve, and is there a long need for the product? So you need to look at the product cycle. So some companies, let's say for example, if you're in electronics, the product cycle will be 6 months to 1 year. If you're in healthcare, the product cycle can be 10 years. So try and pick companies where the product cycle is a bit longer, so you have an ability to recover your investment.
Cleanroom and healthcare glove manufacturer Riverstone Holdings is one company that has been able to evolve its business. From making just basic gloves, Riverstone now provides high-end gloves to the semiconductor equipment and healthcare industry.
We have a very good chance to grow in the healthcare because at this moment our presence in this segment is not significant. For the cleanroom one, because we just recently recognized that there's a new glove is required to fit the flat panel and mobile industry.
Also making good investments, manufacturing companies which have a barrier to competition that is difficult to erode.
The key thing when you are analyzing a manufacturing company is are they able to control the ASP margin or the selling margin? If they have a strong brand or they have a strong niche, then they will actually not be affected by competition. And I think that you pay for that in terms of the premium margin.
Precision engineering firm JEP Holdings is one good example. The company's aerospace division supplies parts to two of the world's biggest plane makers, Boeing and Airbus. And because these parts require very high precision, NRA Capital says it's very difficult for another player to enter that space.
We are seeing that in this sector, especially for the newer plane like the Boeing 787, Airbus A350, they are growing very, very strongly. And we are getting a lot of new requests and new order coming in from this particular area itself. So there's a big potential actually for us to grow in this particular area, and we are seeing more and more requests for us to fabricate all this part, pertaining to this Boeing 787 and the Airbus 350 itself. So, and the good part of this business itself, once you secure the business itself, they're all on a long-term agreement, 10 years, 15 years, part of it.
NRA Capital has an overweight call on both Riverstone Holdings and JEP Holdings.